Hope you have gone through the format. Interest earned is 13, other incomes are 14. Interest expended is 15, operating expenses are 16. Then bad debts and tax comes in the main P&L account. Net profit we work out, in that 25% we transfer to statutory reserve, which is compulsory. Then other reserves, all those things will come. So interest, all types of interest earned will come in schedule number 13. Discount on bills, we had seen this rebate concept. Add opening rebate that belongs to current year minus what? Closing rebate that belongs to next year. Income from investment also will be included here. Include any other income. Charges made in the account, profit on sale of asset minus loss, locker rent, any other value added services you can include it here. Even brokerage charged by the banker or commission charged by the banker, exchange transaction commissions, all the thing will come. Forex transaction also. Interest expended, all types of interest paid by the bank. Then any expenses which are spent for operating. Discount we have seen already, rebate we have seen already. Once again, if required, please go through the schedule 13, 14, 15 and 16. Then we will continue. Come to question number 13. Identify in which schedule these things will come. Identify in which schedule these things will come. Interest received 13. Interest paid on deposits 15. Capital is a balance sheet item that will not come anyway. Salary is 16. Director's fees also 16. Rent also 16. Postage also 16. Reserve fund is a reserves and surplus that will appear in balance sheet. Commission, exchange and brokerage, other income 14. Rent received is another income, other income that will come in 14. Profit on sale of investments also other income 14. Depreciation is an operating expense 16. Statutory expenses also, legal charges 16. Preliminary expenses, that's a balance sheet item, only whatever is written off that will come in P&L account. Audit fees also will be covered in 16. So like this, identify the schedules first in any question. A customer to whom a sum of 16 lakhs has been advanced has become insolvent. It is expected that only 40% will be recovered from the estate. It's like a provision for bad debts you have to create. Other bad debt 2,10,000 they ask you to create. Provision for bad debts they ask you to create. Right? Then they've given the next one. Yeah, provisions and contingencies, that provision for bad debts will come. It is not shown in any of the schedule. It will come in the main P&L account. Okay. Rebate on bill discounted. Opening and closing balance is given to us. We will add with the discount. In 13, we will add the opening rebate and reduce what? Closing rebate. Preliminary expenses to be written off fully during the year, which means charge it in P&L account. Charge it in P&L account. That will also come in 16. If that was not given, we would have taken to balance sheet. Provide for income tax, that will come in P&L account. Opening balance is given as 0. Provision for tax will come in P&L account next. And they've given opening balance of P&L account is 0. So just for information, they ask you to prepare which one? Top Bank Limited. So interest 13, interest paid 15. We are given operating expenses 16, other incomes 14, then operating expenses like that it is given. So let us prepare the P&L account. In the exam also, leave a page gap for the main answer P&L account. Okay, you can just write the format like this and leave one page gap. Because the format cannot be changed. and this is applicable only for a banking company. So for this it may take around 1 page of that. Okay, so then we have to prepare the schedules like schedule 13, 14, 15 and 16. We marked what will come in 13, 14, 15 and 16. You work out and tell me. Try it, work out and tell me. Prepare schedule 13, 14, 15 and 16. Bad debts and tax will come in the main P&L account itself. Start schedule number 13. You try it first, then come to this answer. Okay, interest and discount you take it, add opening rebate, look at the adjustment, add opening rebate, less closing rebate given in the adjustment. What is the closing rebate? 25,000, reduce it, you will get the net discount or interest and discount earned, that will come in 13. I am unable to remove the logo from the display. Other incomes, commission earned, then what else? Rent received, then profit on sale of investments, then what else will come in 14? That's it. Interest expended, schedule number 15. Check the question. Yeah, direct. No working note required. Directly interest is given to us. Schedule 16, operating expenses. Lot of items are there. Let us list out and do it. You shall pass and write. Yeah. Salary, director's fees, legal charges, depreciation, all the items will come. Just list out one by one. Rent, state and taxes, postage, depreciation, then statutory expenses also. Statutory expenses, preliminary expenses, they ask you to write off, audit fees also. Statutory expenses, audit fees, preliminary expenses, they ask you to write off completely. You take the preliminary expenses fully. So add up, you will get the total. Salary, director's fees, rent rates and taxes, postage, depreciation, statutory expenses, audit fees, preliminary expenses. Just add up, you will get the total. If the logo I am unable to remove from here, I request you to just work out on your own. Salary, director's fees, rent, postage, depreciation, statutory expenses, audit fees and preliminary expenses. Total 7,28,640. Check the bad debts. Out of 16 lakhs, 40% is only to be recovered. 16 lakhs into 60% cannot be recovered. Plus, in respect of other bad debts, something else is given to us. The 2,10,000 is given to us. So in 16 lakhs, 40% cannot be recovered. Sorry, 40% can be recovered, so 60% plus other bad debts provision 2,10,000. I hope we are given provision for tax separately as a adjustment itself. We are given provision for tax to be created. Okay, 768, 460 operating expenses. Then bad debts, what is the amount? Sorry. Tax, I hope provision for tax has been given directly. What is the provision for tax? 9 lakhs. So total the expenses, that is the 15, 16, bad debts and tax, you get the total. Total the income also. So income minus expenses will give us profit before tax or profit after tax, sorry. Profit after tax. In that 25% should be transferred to statutory reserve. 25% should be transferred to statutory reserve. Balance will be carried forward to balance sheet. Balance will be carried forward to balance sheet. You shall pass and copy this now. 25% is compulsory. Preliminary expenses we rated up compulsorily, that 40,000. So prepare 13, 14, 15 no schedule or no detail, 16 total it. You shall copy this. Please pause and copy wherever required. Hope you have tried this on your own. Hope you have tried this on your own and copied this. If required, you can pause and copy. Pause and copy and proceed to the next question. So we are given question number 14. Paid up capital is a balance sheet item. Interest and discount receipt will come in 13. Interest paid on deposits. Paid on deposits. Will it be 14? No. 15. Salaries, rent, director's fees will come in operating expenses 16. Statutory fund, that reserve fund will come in reserves and surplus. When we prepare balance sheet, it will come. Postage and telegrams. Postage and telegrams, it will come in what? 16. Rent receipt will come in 14. Other income. Commission other income 14. Profit on sale of investment other income. Depreciation on brand property. Law charges and audit fees will come in what? 16. It is similar to the last question, only you can try it. You can try it. You shall pass and try it. That 50% will be recorded, means remaining 50% bad debts. Then apart from that, other bad debts are like 1.5 lakhs. Rebate on discount opening and closing is given. Provide for income tax is given to us. It is similar to the last question. You shall pass and try. One extra thing is that the board of directors provide a dividend of 10%. That will come in P&L appropriation account. Appropriation of profit. Dividend is an appropriation of profit. For me, it is just copy paste. Hope you tried this to continue this level. not, please pause it at least now, then try it on your own. Without trying, the concept will not go to your mind. Please ensure that you prepare this P&L account with schedule 13, 14, 15, 16, bad debts, tax, and of course net profit for the year. At least you work out, then you continue with this lecture. So total of 13, interest earned plus opening rebate minus closing rebate. Hope you tried it and continuing here. Interest earned plus opening rebate minus closing rebate will give us 37,01,500. 37,05,500 plus 12,000 minus 16,000, like that. Other incomes, rent, what else? Yes, commission, profit on sale of asset. Interest expended 20,37,000. Operating expenses, hope you got 10,55,000. Hope you got 10,55,000. Check your schedule number 16. Bad debts 10 lakhs into 50% plus that additional bad debt 1,50,000 to be provided. Both you take it. How much? I'm not preparing the schedule because I've asked you to try then continue the video. It's like a homework problem which I'm giving the solution. Yeah, 4,55,000 only. Schedule number 16. Sorry. Bad debts and taxes. So total of income minus expenses gives me net profit. On the 25% transfer to statutory reserve, there is a proposed dividend given in the question. Dividend will be calculated on the paid up capital, not on the net profit. 10 lakhs is the paid up capital into 10%, 1 lakh. So interest earned, we got 37,01,500. Other incomes, rent, commission, profit on sale of investment. Interest expended 15, 20,37,000. Operating expenses. Operating expenses. Yeah, just add up all those depreciation, legal charges, audit fees, all the operating expenses that is explained. 4,55,000. Bad debts on 10 lakhs 50% that cannot be recovered plus 1,50,000 other bad debts. Taxes 6,50,000. So total expenditure is 37,92,000. Net profit for the year is 44,59,500. Number one, statutory reserve 25% of net profit. Proposed dividend 10 lakhs into 10%. Proposed dividend. Dividend is always calculated on the paid up capital. On the paid up capital. Then balance carried forward to balance sheet is from 44,09,500 minus reserve and dividend. You will get the balance carried forward to balance sheet. You shall pause, verify, or change your answer according to it. Oh my God, I made a mistake. Other incomes 4,55,000 only. Other incomes 4,55,000 only. Yeah, sorry, change the answer. $41,56,500. Total expenditure 37,92,000. Net profit for the year. Create 25% of profit to statutory reserve. Proposed dividend 10 lakh into 10%, 1 lakh, balance carried forward to balance sheet. Please pause and copy, then we shall proceed. Next question also. Yeah, this is question number 14. Next. Try to work out question number 15. For me, it is just copy and paste, cut, copy and paste format. Okay, try to work out question number 15. Pause at this moment. Please try to solve it, then let us proceed. 13, 14, 15, 16 you prepare. Then of course, other things we have to work out and proceed with it. Please go through 15 and try to work out. It's a simple question. Interest will come in. Hope you tried it, then continuing here. 13. Other income, 14. Interest paid on deposits, 15. Operating expenses, 16. Directly it is given to us. Classification of assets. We have to create provision for bad debts based on the classification of assets. Standard assets, how much percentage? 0.4%. Standard assets, 0.4%. Substandard assets, fully secured. Secured percentage, 15%. Doubtful assets, fully unsecured means 100%. We know 100% provision to be created. Then unsecured 100%. Doubtful assets, fully secured up to 1 year, how much percentage? 25%. Up to 3 years, 40%. Then more than 3 years, think 100%. Loss assets also we have to create what? 100% provision. Then investments 37 lakhs held. Bank should not keep more than what? 25% of the investment as what? Held for maturity as investment. The market value of the 75% of investment is how much? 9 lakhs is given to us. Provide 40% for provision for tax. Transfer 25% of net profit to what? Statutory reserve. First, let you work out provision for bad debts and let us see. This part. Standard assets, substandard assets, doubtful assets, what is the total? If not, pause and try. If you have not tried it, ensure that you pause and calculate. Add up and tell me. I'm going to be in mute for some time. I'll just work out. If you worked out, just verify your answer. Just I muted. I just muted. No voice. No voice now. Substandard assets 15%, doubtful assets 100%, secure 1 year 25%, up to 3 years 40%, more than 3 years 100% we create 200. Loss assets 100%. This is the provision for bad debts to be created. Investments are 37 lakhs. Should not keep more than 25% of the investment as what? Held to maturity means long-term investments. Held to maturity means long-term investments. %25 is held to maturity. 75% will be treated as what? Taken as trade investments or short-term investments. So 37 lakhs into 75% will be taken as what? Short-term investments, trade investments. What is the market value? So reduction in the value of investment. Once again, repeat, 25% is long term, held to maturity, 75% is short term, market value is 9 means. So we have to create a provision for that also. We need to create a provision for that also. Short term investments should be valued at cost or market price, whichever is less. Cost is 27.75. Market value is 9 lakhs. So 18.75 lakhs is the reduction in the value of short term investment. 18.75 is the reduction in the value of short term investment. That should also be provided along with bad debts. So 1410.75. So this is the provision for bad debts and for investments. So record other things simply. 13, 14, 15, 16 given directly. We can just record it as it is. All the things are directly given. No schedule required. Here, provision for tax I missed out. How to work out provision for tax? Work out profit before tax. $7,600 income minus the expenses minus that 2,500 and 1410.75. On this, reduce it and create the provision for tax. So income minus expenses into 40%. My God, should be in brackets. Yeah, 675.7 is the provision for tax. So total expenditure is that much. Income minus expenses will give me net profit for the year under 25% transfer to statutory reserve. No proposed dividend in this question. Balance carried forward to balance sheet. So what is extra in this question is the reduction in the value of investment is also included in provisions and contingencies 1410.75. Income minus expenses, provision for bad debts quota. You get profit before tax, that into 40% will give us provision for tax. Minus income minus expenses gives us what? Net profit for the year. Yeah, I made a mistake. I made a mistake here. Sorry. Market values 9 lakhs, which means 900,000. Oh my God. Yes, correct. You are correct. Absolutely correct, Ganesh. Yeah, sorry, change your answer. Provision for bad debts and investment changes. So there is no profit. It is only the loss. So when there is a loss, no need of creating statutory reserve and balance carried forward to balance sheet. 37 lakhs rupees in thousand. Oh, that created the issue. Sorry, I read it wrongly. 37 lakhs means 3,700 thousands into 75%, 2775. Market value is 9 lakhs. That is 900 thousands rupees in thousands. So that caused confusion. 1875. So 1312 plus 1875, 3267 is the provision and contingency. If you look at total of income is less than total of expenditure. So net profit is a loss actually. So no provision for tax. Only when there is a profit we have to provide for tax. Here it is a loss. So no need to provide for tax. Thank you for correcting. Okay, it is 2775 minus 900, 1875 thousands. So 1312 already plus 1875, 3267 is the provision and contingency. So since it's a loss, no need of providing for tax. So net profit for the year is minus 167. That is net loss for the year is 167. Pause and copy this, then we will proceed. It's a fantastic question for about 6 to 8 marks in the exam. 6 marks to 8 marks, it's a very good question, especially learning about this investment. Long-term investments, no issue. They are held for maturity. They are valued at cost. They are always valued at cost. Short-term investments only, cost or market value, whichever is less. Cost is 2775. Market value is 900. So there is a reduction in the value of investment which we provide. (1392) other provision for bad debts. 1875 is the provision that is required for short-term investments. 3267 total provision and contingency. No tax because it's a loss. Minus 167. Pause and copy this, please. We'll do one of the problem from ICAI material. Illustration 3. Interest on cash credit, where it will come? Schedule number 13. Earned by the bank, 13. OD also. Interest on OD also earned by the bank, 13. Just analyze this. ICAI material, illustration number 3. Interest on OD also, 13. Interest on term loans earned by the bank, 13. Income from investment also, 13. Interest on balance with RBI. We are keeping the balance with RBI. RBI will pay the interest to us. RBI will pay to the interest to us. It's an income. It's not interest on loan from RBI. It is interest on balance kept with RBI. Income for us, it will come in 13. Commission, other income, 14. Commission on LC, letter of credit, other income, 14. Commission on government businesses, 14. Profit on sale of building, 14. Loss on exchange transaction will be a negative figure in 14. 27 is a positive amount. Loss and exchange is a negative amount in 14. Interest paid on deposit 15. Auditor's fee is direct. See, profit on sale you will add it to 14 and loss on sale you will what? Reduce it from 14. It cannot be shown in Schedule 16. It cannot be shown in Schedule 16. It is not an operating expense. So that will come in 14 as a minus figure. Interest paid on deposit, of course, expense. In interest expended 15. Then auditor's fees, director's fees, advertisement, salary, PF, printing and stationery, everything will come in what? 16. Printing, repairs and maintenance, postage, everything is 16. Interest on NPA is given to us. Look at that. Interest on NPA. On NPA, we know that income should be recognized on earned basis or collected basis. NPA, we should recognize only what is collected. So 820 is earned, 400 is collected. Please remember the last class notes. Whatever is not collected should be cancelled. Interest on cash credits, interest on OD, interest on term loan. On NPA, whatever is not collected cannot be taken as income. So it's like 750, right? 250 is only collected. Remaining 500 is not collected. Whatever is not collected cannot be recognized as income. That must be eliminated. So they have given standard, substandard, doubtful assets up to 1 year, loss assets. That is for provision for bad debts. That is for provision for bad debts. So standard, point, put substandard, doubtful assets, we can create the provision. Loss assets means 100%. Look at investment, 25%, more than 25%, you should not take it as health maturity investment. Market value, the remaining investments are 19,75,000 only. Same like last question you have put. So in the interest on cash credit, NPA, whatever is not received, you should cancel. Let us work out. Interest on cash credit. How much? Less whatever is not received on NPA. Because NPA, only receipt can be taken as income. Whatever is received can be taken as income. Whatever is not received cannot be taken as income. Out of 820, we received only what? 400 means remaining income cannot be recognized. So eliminate it. From the total interest on NPA, we can recognize only 400. So whatever is not received cannot be recognized as income. So eliminate that 420. Out of 1820, on NPA we have not collected 420. Eliminate that, we get how much? 1400. Same way for the others, you can try it. Interest on OD, how much is given? 715. Eliminate NPA not received. Same way you eliminate earned minus collected. It will give us what is not received. 450 minus 100. Same way for the other one. Term loans 1540 minus on NPA not received. Earned minus collected will give us not received amount. Out of 750, 250 is collected. Balance 500 cannot be recognized. So 1040. You add up, you will get the answer for schedule number 13. Add up all these things, you get the answer for schedule number 13. Income from investments will come in 13, of course. Interest on balance that is kept with RBI. It is not loan given by RBI. The banks have to keep certain cash reserves with RBI. For that, RBI is giving interest to us. It's an income for the bank. Add up 13 total you get. So from this question, we understand on NPA, the income is not received, that cannot be recognized. Record other incomes. Yeah, commission on remittances, all types of other incomes. Commission on letter of credit also. Next. Okay. Government business commission also. Add profit on sale of building. Wait. Add profit on sale of building. Other income minus loss on sale if there is any. Loss on sale cannot be taken as an operating expense. Please remember, loss on sale of asset or loss in exchange transactions cannot be taken as an operating expense. Schedule 15, interest expended. On deposit, how much? You just record. What is the deposit, interest on deposit? 2720. Hope you have taken up this. Schedule 16 next. You prepare schedule 16 next. Operating expenses. Pause and copy if required. Shall we? Yes. Do schedule 16 and tell me the total. All operating expenses. I hope you are getting 2340. Then create a provision for bad debts also. Yeah, I'm in mute. Standard assets, substandard assets, loss assets, the reduction in the market value of investment, everything you work out. 0.4%. Work out. You shall work out, then continue. Please ensure that you are solving on your own so that the concept goes to your mind. This we are doing, I hope, as a fifth or sixth question for provision for bad debts. Even that held for maturity investments we have done many times. Standard assets, substandard assets, then doubtful assets, unsecured portion 100%. Loss assets 100%. What is the total investment? 75% of the total investment you have to take. This one, okay. 75% can be held as what? Read the question properly. Okay, 75% of investment can be taken as held to maturity investment. Okay, 25%. Okay, 75% is trade investments. So the market value is 1975. 1975. So reduction in the value of investment also you provide. Next, prepare the P&L account. Have we got 2340 in schedule number 16? Tax done. Now let us proceed to the P&L account. Let's prepare interest earned, other incomes, then interest expended, operating expenses. Hope you prepared. This provision and contingency which we created now, 680. They don't ask any provision for tax, right? Check it. No provision for tax. So net profit for the year, in that 25% of net profit should be transferred to statutory reserve. No provision for tax in this question. So 25% of the profit. What is the profit? 1860 into 25%. Oh God, oh God, oh God, oh God. Again, I'm making a mistake. Sorry, sorry. It's a net loss for the year. What is the net loss for the year? 1660. So no appropriation. The problem of copying and pasting from the previous one. Okay, so total income of 4080, total expenditure is 5740, net profit for the year is how much? 1660 minus 1660, that's a loss. So no tax payment. You shall pause and take it. Let us go to the next illustration that can be tested for about 1 or 2 marks in the exam. 3 marks question can be tested. Yeah, this is the answer. Go through this. Performing asset, non-performing asset is given to us. They ask you to find out income to be recognized. Simple. For performing asset, you add interest earned. Performing asset, check, cash, credit, term loans, bills purchased and discounted. You just earned interest earned. Okay. For non-performing asset, you take interest received. Performing asset, add that interest earned. Receipt doesn't matter. For the non-performing asset, add interest received. You will get the answer. Accrual basis for performing asset. Cash basis for non-performing assets. That's all. So we have learned about how to prepare or how to recognize income on performing assets and which one? Non-performing assets. Earned basis, receipt basis. That we are applying in this question. So far we have learned about how to create rebate on bill discounted, how to recognize performing assets and non-performing assets income, how to create provision for bad debts, how to create P&L account, how to prepare P&L account, all those things we have done so far. In the next session, we will move on to preparation of balance sheet. Schedule number 13, 14, 15, 16 talks about P&L account. Schedule number 1 to 12 talks about balance sheet. What is it? We will discuss in the next class.